Initial offering means for the first time when you are offering any primary market which is going for the primary for a specific period known as lock-up period. So when the opening date we call it as in the financial terminology. So the lock-up period, they provide the capital needed by the issuers because the issuers are already authorized capital what they are decided. So now it is going for the real market to raise the fund. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce, Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 3, Session 1 of BCom Financial Institution and Market. The chapter name is Primary Market and Secondary Market. And today my agenda, you are getting more clarity about the primary market. So you got an idea of primary market and the features of primary market, what it is, and players of primary market, and what are the instruments in the primary market we can identify, and about the merits and demerits of primary market. Okay, moving forward one by one. So here, primary market means any company under listed company when they are issuing a shares for the first time, okay, for the investor. So we can identify issuer, the company are issuing to the public for the first time. So here the primary market also known as a new issue market. First time they are issuing, it is that's what we call it as a primary market. So our primary capital market, okay, the primary, the word only we can understand that is first time when the company are issuing for the first time is a financial marketplace, because we are finding most of the companies, okay, they're raising a fund using a primary for the first time. Okay, now for example the startup company, why it is very important, so you are getting more clarity in the coming slides, where new issue securities such as the security which is including stock, bond and other financial instruments, okay, so either which is coming under the financial instrument, clear, and are offered to the public for the first time. It is very important highlighting points here. The first time the company are issuing, okay, so the company or government are raising a capital through the primary market, and it is the initial stage of the security. Security, just now you got clarity, the security which is including stock, okay, either equity or bond, okay, and trading, so which is going for the first time trading. So there is we can find out the investors, they are trying to go for investing using a specific platform. So where company or government entity raise capital by the selling their security directly to the investor. So that is actually the investor, okay, those who are going for investing. So then after investing they are becoming a shareholders. Moving forward, next you will get more clarity about the features, what a characteristic you can find out in the primary market. So here the first one, initial offering. Initial offering means for the first time when you are offering any primary market which is going for the primary first time, okay. So initial, in the primary market, security are offered to the public for the first time through process like initial public offering. It call it as IPO for stock and new bond issuation, so which is first time we are issuing. The second one, capital rising. So any primary market or secondary market always with the intention to raise a capital. Capital can be going for business expansion or funding agent project. The primary market serve as a mean for company, okay, not only for company, even the government, they can raise a capital through the primary market. So which is a capital rising is very important. And entity to raise capital for various purpose means expansion, your business expansion or new project or infrastructure project, so such as funding expansion, okay, because the company want to establish one more unit, so they need to raise, or company are purchasing a substitute company or acquiring a similar company, so that time capital is important. So debt repayment. Debt means no doubt when there is any company rising borrowed loan, okay, loan, debt is a long-term loan or medium-term loan. So obviously when the company are raising a loan, the company are paying interest, so just for overburden. So if you are going for a repayment of a debt in case of long-term payment, because the company are paying interest regularly, so that's what the capital market means, which is coming under the majorly equity shares or preference shares. That time actually the priority rights which is given to the preference shareholders, but voting rights which is given to the equity shareholders, so easily we can go for repayment and other project financing. And third one, direct transaction. Here the direct transaction in between there are two parties are important, investor and issuer. Issuers can be a company, okay, or government. Through the proper platform like a demat account, now we are doing for electronic transaction, so with the help of a demat account, So the investors are going for investing. The transaction in the primary market occur directly between the issuers. Issuers means, you must remember, the company or government, those who are raising a fund. Okay, so and investors may be your individual or in financial institution, high level raising a fund, or your underwriter. So the company or entity issuing the security receiving the fund raised through from the investor. Investors may be your individual person or retail investor or financial institution. So using the direct. Next one, regulation. Again, the primary market and secondary market, which is regulated and controlled or supervised by the SEBI. Okay, in case of in India, but in case of United States Security Exchange Commission. Okay, which is a United States. So each and every country we can find out the regulations body. So the primary market activity are subject to regulatory oversight. So they are always observing. Okay, so as an investor, they want to get a protection or safety while they are investing. So that's what. So the protect interest for investor. To protect the investors, the regulatory body are taking a proper steps. Okay, so regulatory bodies such as Security Exchange Commission, which is related to United States, and the Security Exchange Board of India, which is coming under the India, ensure that the issue provide accurate and transparent information to the prospective investor, because the transparent everything the company are publishing accounting information. Okay, so because which is a compulsory made by the regulatory authority or regulatory body. So moving fifth features under the primary market, so which is a price determination. Okay, so any security or issue for the either first time or second time which is going for trading, so the price determination is very important factor. The price of security in the primary market is typically determined through the process to that consider factors like market demand. Not only market demand means actually the investors are ready to go for investing. So again, the company they have an ability to supply to meet the demand what investors are showing. So the issue of financial health, because the company want to raising a fund, so obviously they will think about the financial health and prevailing market condition to prevail the market condition. Now sixth one, limited trading. The limited trading means actually there is something restrictions we are finding. The company at the time of issuing, so there is open date and closing date of applications are clearly specified in the date at the time of notification. So the security purchase in the primary market are not immediately we cannot purchase. So because the open date tradable on the public stock exchange like in India, Bombay Stock Exchange and National Stock Exchange. Okay, so like the investors may need to wait. They keep on watching the date when the company are going for issuing the application. Okay, so for a specific period known as a lockup period. So when the opening date we call it as in the financial terminology. So the lockup period to lapse period, they can freely trade this security on the secondary market. So the primary market which is going for the first time, so the same instrument which is going for second time, which is coming under secondary market. So then also the regulatory body are monitoring the transaction, controlling it, taking a supervision. Moving forward, next one, those who are very important players in the primary market. Players of primary market, the first one, issuers. Okay, which company or government giving offer to the public. Okay, so which is the issuers. The issuers is an entity, so often a company or government that want to raise capital, because the company or government are raising using a security instrument. By issuing security, they are primary player. The primary market are initially for the issuation. So the issuers are giving an offer to the investor. Now moving to the investors means actually now they are ready to go for investor. Your investors may be a retail investor or financial institution. Okay, so the company itself, other similar company, they can invest in your specific security. Investors are individual or institution that purchase the new issue of security. Okay, so they can also purchase. They provide the capital needed by the issuers, because the issuers are already authorized capital what they are decided. So now it is going for the real market to raise the fund. Okay, so the investors can include retail investor. Okay, the retail investor as an individual person, or institution investors. Institution means any specific company or any substitute company or financial banking sector, so they can also invest here. and high net worth individuals, when they are always going for investing in the primary market. And next one, underwriter on behalf of the investors, the underwriters are giving a guarantee to purchase from the particular company when they are offering a shares. So underwriter may guarantee the sale of the security or purchase them directly from the issuers, because the company, till the investors, they are not waiting. So obviously they can approach for the underwriter, okay, or giving some discounted price. Okay, the underwriter always purchasing a bulk quantity from the issuers and then they sell them to the investor. Okay, now for example, Jan 1st, the company want to planning for raising a capital, so they are try to approach in the any underwriter, so they are try to purchase a bulk quantity from the issuers. Next one, regulatory authority. It is very important under player. Okay, now we are for example Indian company or a US company or any company. So the regulatory authority, what they are setting a rules and regulation for raising a primary capital. The regulatory bodies such as a Security Exchange Commission, we are talking related to United States, okay, in the United States, and Security Exchange Board of India, which is which is completely coming under any company or any foreign company, so which is operating in the Indian, okay, capital market. So regulated a primary market to ensure that the issuance process for fair and transparent. So always each and every company, when they are raising a primary capital or doing for secondary capital, so they want to follow the regulatory body rules and regulation. What? Because the investor, to protect the investor, to safeguard the investor, the regulatory bodies are playing a very important role. That's what everything is transparent here. Moving forward, the fifth one, legal advisor. The legal advisor may be your lawyer, okay, your advocate, you are getting a consult from the legal advisor. Okay, so the legal firm and attorney is nothing but a lawyer, provide legal counsel to the issuers to ensure that regulatory requirement are met in the issuation procedure, because there are too many rules and regulation which is related to raising a capital through the primary market or secondary market. We need to get a legal opinion from the legal advisor. They also help to drafting the prospect, because before issuing the public, the company, a private company, a government, so they want to prepare the prospect, the prize money, what is the lot size, okay, what are the code of conduct followed by the investors, the guidelines for the investor, everything is printed in the prospectus, which is always printed format or digital format, which contain important information about the security being offered. So everything, the company, whatever the procedures they want to follow, so which is printed in the prospectus. Next one, auditors and accountant, because you have everywhere the accountant is playing a very important role, because we need to track the, okay, we need to trace the auditor, review the issuer's financial statement to ensure the accuracy. Okay, the auditors will check and compliance with the accounting standard, so which is meeting the standard accounting standard, because we are talking related to Indian accounting standard. If companies are belongs to Indian, so they want to follow the accounting standard, so which is monitor and prepared by the accountant. Okay, so their report provide confidence to investor regarding the financial health of the issuers. So obviously as an investor, they want to get more clarity about any particular company before investing. Financial advisor, any company when they're raising a capital through the primary market, they need to get a financial advice. Okay, so that's what the company are appointing the financial advisor. Okay, so financial advisor often hired by the issuers. Issuers means always company, raising company, provide guidelines on the structure of the offering, or they want to design proper structure when they're raising a capital using a security market, and including the type of security to the issue and the timings, because they want to specify which date it is going to open the application and when is the last date, what is the quantity. Okay, and appropriate market condition, suitable appropriate market condition we need to go for. Next one, rating agency, which is completely rating agency, ideal crystal. In case of bond, which is nothing but the rate of interest, which is related to the rating, are done with the rating agency. Rating agency assess the creditworthiness of the issuers and assign credit rating to the security. They want to assign the credit rating. This rating influences the investor decision and interest rate at which the bond can be issued. Because the company are using a security, maybe your bond, okay, which is always holding a interest factor. Next one, exchange or platform. Any investors or issuers in between, there is something like exchange, either Bombay Stock Exchange and National Stock Exchange. So the primary market security may be listed under the stock exchange or traded on the specific platform. Any company which belongs to the Bombay Stock Exchange, which is also listed or unlisted, so obviously they need a platform. This entity facilitates the trading and liquidity of the security after the initial issuation, because the opening date, initially IPO, which is initial public. Okay, so here which is coming under the listed. And 10th one, retail brokerage. So they are acting like an agent between investors and issuers. Okay, company. Retail brokerage firm act intermediary between the retail investors, your individual investors or financial institution. Okay, so and the primary market. So they are acting like an intermediator. So they are, of course, they're getting commissions. They help individual investors to participate in the primary offering. So they're getting, because as an investor, if they don't have any idea of which company they want to get advice, because they are selecting a platform using, like, for example, PayPaisa, Zerodha, Angel Brokers. So they are the intermediators. Institutional investors, so they are always purchasing a bulk quantity of shares. So large institutional investors such as a mutual fund, because the company or any specific security are going for the mutual fund, which is going for the diversification of investment, okay, to maintain the portfolio. And the pension fund and hedge fund often participation in the primary offering by the purchasing significant amount of security, because their quantity are very huge, okay, compared to the individual investor. And next one, retail investors. Oh, just retail broker, how a retail investor is a small investor, so they are purchasing a small quantity of the security. Individual investor who buys security directly from the primary market are considered retail investor. Okay, so they have a complete freedom, they complete have an access to invest in the specific company. So they may participate in the initial public offering, IPO, or other primary market offering through the brokerage account. So you using a brokerage account, we can approach for the broker intermediator. Next one, market makers they are decided for the issuer's price. Okay, so according to the market situation, market demand and supply, they are trying to fix a price. Okay, so they are always taking in some cases, market makers may play a role of primary market, ensuring liquidity facility to the buying and selling of the newly issued security on secondary market shortly after the primary offering, because they are the decider. Okay, so they can go for approaching the secondary market using the market makers. Now, what are the instruments in the primary market? So majorly a primary market which is always focusing for the medium term and long term fundraising. So the first one, common stock like equity shares. You got clarity, because the equity shareholders always having a voting rights. And next one, prepared stock, which is nothing but preferential rights is given to the investor. And next one, corporate bond, which is always going under the credit rate, because the bond is holding a interest. And next one, government, which is offered by the government. And next, initial public offer, first time issuing, okay, the primary market, what you studied in the last slide. And right to issue, which is nothing but already existing shareholders, the company are giving additional shares, which is a right issues. Debenture is nothing but your long-term loan, which is secured. Okay, the company raising a fund through the debenture. Okay. And next, municipal bond, which is a municipal authority or raising a bond. Okay. Next one, convertible bond. Any convertible bond, either you just approach, invested for the equity shares. If you have any freedom to the company, are given option to go for converting a preference share or debenture. So this is your convertible bond. Okay, and the preference shares already discussed. Next one, treasury bill. You government can raise a treasury bill. And the commercial paper in between the banking institution, commercial paper. And next one, asset-backed security and right and warranty, unit trust and mutual fund, exchange traded fund. Okay, so there are too many instruments we can find out in the present trend. Okay, so moving forward, next one, you will get to know the what are the merit. The first one, capital formation. The capital is very, very important for any company or any government. The raising a capital formation using a primary market or secondary market. The primary market play a crucial role in raising a capital for the business. Okay, not only for the business, even the government also raising a fund through the primary market because they have a lot of commitments. They want to go for developing infrastructure. The fund is very, very important. Company can issue new shares or bond to raise. They're raising a fund because of expansion of your business and R&D, research and development for sake of machinery purchase, huge equipments are purchasing, a new project approaching. And debt repayment, because already the business are borrowed loan from the any financial institution. So if they're getting profit or loss, they are paying the interest to just for overburden. When they are paying interest, which is a burden for the company. So if you want to go for repayment, so that time you can raise and other purpose like project infrastructure. Next one, price discovery. So easily we can discover the price which is going for the primary and trade. So as an investor, they can get to know the what is the price status. This price discovery mechanism provide a reference point for the secondary market trading and ensuring a fair and transparent pricing before going for investment. So you will get each and every company the single unit of shares price, okay, a stock price. And the access to investment opportunity. This primary market which is going for access to investment opportunity because you have an excess which is treated as a surplus. You are trying to go for investing, so generating a surplus or excess rate. The primary market offer retail and institution investors to chance participation in the initial public offer because as an individual person, their disposable income can be increased due to go for investing in the any specific IOP and the purchase newly issued security. Next one, the transparency and regulation, because every company, listed and non-listed company, which is monitored by the Security Exchange Board of India, when we are talking related to India, so which is a transparent between the investors and issuers. Primary market subject to regulated oversight to ensure the transparent and protect investor because you are investing money, you need to get protection with the help of regulatory body. Next one, funding innovation, because there are different primary market instrument we found. So find next, company in the emerging industry and startup often rely on the primary market to raise capital for the innovative project because whenever you have an innovation in the mind of innovation, so you need to raise a fund to take initial steps to start your business. That may not have access to the traditional financing source. When we are trying to compare the traditional and modern, so in the modern we are finding a different instruments. Moving forward, next, what are the demerits? Obviously, where there is a demerits, obviously there is a demerits also. Few demerits we can find here. And demerits of primary market, the first one which is raising a capital through the primary market. So there is a lot of expenditures either which is printing a prospectus or commission for the underwriter, losing your discount for offering for the underwriter. Okay, there are a lot of printing expenditure. Okay, so the ICAs issuing a security in the primary market can expense you due to underwriting fees. And legal formalities, legal cost, and the administration expense. Too many parties, too many persons are involved. Okay, so company may also need to offer incentive to the discount and warrant attract investor. Okay, so this is your high cost. Second one, market timing risk. So market, everything, the demand, the price of the stock, the price of the bond, which is decided by the market. So obviously the price may be decrease or increase. This is also correctly, we can accurately, we cannot say. The success of IPO, a new bond issuations often depend upon the market condition. So the price are decided by the market condition. So poor timing can result in lower than the expected fund rise or even the failure attract to the investor. So the right time, if you are not investing, obviously you going to lose your investment money. So next one, limited liquidity. And the primary markets, limited liquidity, easily you cannot convert. So that's what, which something restrictions we are finding. Once security are issued in the primary market, they enter the secondary market for trading. So first time they want to approach using a primary market, then only which is going for the secondary market, where there is a buying and selling in between the investors and exchange. Next one, disclose requirement. As a company, they want to disclose the information, okay, like accounting information. So the company must disclose significant information about their operation and financial when issuing a security to the primary market, because they want to disclose. When you are disclosing, you are not giving offer to the only investor, you are giving a information for your competitors also. They are getting your financial conditions. And volatility. A new security can experience significant price fluctuation in their early day of trading. So there is a movement we are finding. It can be a challenge for investors seeking a stability. We are not in the stable mind. Okay, and next one, underpricing. As an investor, few points can be benefited to the company, few points which is benefited to the investor. The same thing like disadvantages also investors and issuers also facing. To attract investor, company may underprice the security in the primary market, because you need to attract for the investor, then only the investors they start going for investing in the IPO. Okay, so resulting in potential for loss of the issuer, because when you're giving underprice, a low price, what you decided, so which is losing your margin. Okay, keep on watch for next section. Thank you.